US dollar bills, stock tickers, grocery store prices flashing on screen. The numbers are in and there's finally some relief in sight. The June 2025 Consumer Price Index or CPI shows that inflation is continuing to cool, offering a much-needed break for Americans' households and igniting hopes for a potential interest rate cut by the Federal Reserve later this year. Graph showing CPI trending downward. According to the Labor Department, inflation rose just 0.1% in June and only 2.8% year over year, in the lowest annual rate since early 2021. Core inflation, which includes food and energy, also ticked down to 3.1%, signaling that underlying price pressures may finally be easing. Footage of grocery store aisles, gas stations, and used car lots. Grocery prices have stabilized, gas prices dropped, and even used car prices, which soared during the pandemic, are now retreating. The most stubborn categories like housing and insurance are still elevated, but the trend is moving in the right direction. Federal Reserve Building, Jerome Powell speaking. So, what does this mean for the Fed? With inflation now nearing the central bank's 2% target, economists and Wall Street analysts are betting the Fed could be cutting rates as early as September if this trend holds. Wall Street traders headlines showing rate cuts beats Feds. Market responded immediately. The Dow surged, treasury yields dropped, and mortgage rate forecasted improved. Lower interest rates would mean cheaper borrowing for consumers and businesses, potentially boosting home sales and economic growth. Americans shopping, buying homes, small business footage. But experts argue cautions. The Fed is still watching wealth growth, global oil prices, and consumer spending closely. One wrong move and inflation could re-accelerate. For now, though, the report is a sign of a hope. After years of surging prices and painful rate hikes, America may finally be turning a corner. What do you think? Should the Fed start cutting rates now? Stay informed, more updates on the economy, markets, and your money right here. Like, comment, and subscribe.